We're about to talk about what's currently going on in the stock market, and we're going to talk about what's going on with particular stocks, Gamestop, AMC, and Blackberry. Robinhood, a trading app, has given access to a lot of people the ability to trade. A lot of people that didn't used to trade stocks are now able to trade stocks. So a lot of day traders, a lot of consumer traders, and what this has done is allowed stocks to either go super high or super low based on the demand of the everyday person, the average general public. And so you can manipulate that very easily by either news coming out or, for example, a Reddit forum. So a Reddit forum, Wall Street Bets, has come out and it's really made a huge difference in a stock that was being shorted by most people, because in reality, GameStop is closing stores. GameStop sales are plummeting, but yet its stock is skyrocketing. I mean, tenfold, even more than tenfold. So let me show you this really quickly. And we're going to watch this and talk about this. But if you guys are new, I'm on Twitch every single day if you're watching this on YouTube. Twitch.tv/MarleyFicalora. Make sure to follow and subscribe. We're going to talk about eating healthy and things like trending news about finance. So here we go. We're going to watch this video. This is going to be fun to check out because this is very topical right now. Okay, ready?
Bring in the CEO of Robinhood. Vlad Atenev is with us right now, and we appreciate you joining us on a day where there are so many questions. And as Melissa just said, there are, frankly, as you know, a lot of angry customers out there and a lot of questions about what took place and the decisions that you made to limit so many of your customers' ability to buy stocks like GameStop. Questions about whether you have a liquidity problem, whether you're trying to protect them from themselves, whether Citadel did this. Explain what happened today.
Okay, so if you guys are new and you don't know what Robinhood is, it's an app that's on the Apple App Store and the Google Play Store. And again, like I said, it actually allows the everyday person to trade stocks. They also have fractional shares now, which allows people to buy stocks that are too expensive. Say a stock is $1,000, you can buy a fractional share and buy only $100 or $10 worth. You're going to buy a fraction of a share, and that's allowed a lot more people to buy shares. But one of the things that's occurring currently with Robinhood that's getting in a lot of hot water is that they are dictating who can buy what stock and who can't buy what stock. So say your only trading platform is Robinhood and you're new to investing and you're seeing GameStop making this major rally. It's going from what it was with like $4 all the way up to $140, or now I think it went all the way up to $400. And you're seeing this stock go crazy, and you're hearing about people like Ryan Cohen, who owns 12% of this company, the former founder of Chewy, and he's making $1 billion overnight. And you're like, I want in on that action. I want to buy some GameStop. They're squeezing short sellers because the short sellers had bought a lot, which increased the demand for the stock, even though the stock was worthless, essentially, because GameStop's doing very poorly in its financials. But either way, you're thinking, okay, I want to buy some of this stock on Robinhood. But Robinhood, because of this high volatility and trying to protect the average consumer, says no. You can't buy this. We're shutting it down. Now, that kind of goes against the ability to buy stocks or not buy stocks. You don't have the freedom. If your Robinhood is your only avenue to buy stocks, now you can't buy GameStop. I get they're trying to protect you, but it should be more open. This is a lot of, and AMC and Blackberry as well. So all these. So they're talking to the CEO right now, and they're talking about why are you limiting, why are you stopping people from being able to buy stocks or be able to make the decisions that they want to make. They should be able to do with they should be able to do with their money what they want to. So here, let's listen to this.
Thank you for having me on the show again, Andrew. So what happened today was, as you pointed out, we had to make a very difficult decision. It's been a challenging day. We made the decision in the morning to limit the buying of about 13 securities on our platform. So to be clear, customers could still sell those securities if they had positions in them, and they could also trade in the thousands of other securities on our platform. So it was a difficult decision, and that's what we had to do as part of normal operations.
But
so it's something like this hasn't really happened before in the history. We haven't had all of these limitations on what you can buy and what you can't buy. So he's saying you can sell it. So obviously, if you've increased your value, if you bought a lot of stock in GameStop prior to all the news coming out, prior to the major rally then you can get out of your position, which is good, obviously, because if it dives and they didn't allow people to sell, we would have huge, huge problems. But they're not allowing people to buy, and that's still a problem as well, especially when people are, believing in Robinhood or starting to use Robinhood as their first investing platform. Robinhood got a lot of people to start using Robinhood because of free trades. That's how they got all these consumers, the average day investor, to start trading, because it used to be like $12.95 or $13.95 to trade on TD Ameritrade or Fidelity. But then Robinhood came and kind of undercut everyone and said, we'll do $0 free trades. And other platforms have followed. But the problem is now Robinhood is dictating what you can and what you can't buy. And they did this previously. This isn't the first time. This is just the first time that they're getting a lot of heat from it. But they did this previously with other stocks, including HMNY. I don't know if you guys are familiar with that. It was MoviePass. MoviePass had the same sort of meteoric rise and fall. It went way up and it went way down. And a lot of people lost a lot of money. And a lot of people on the end, like the consumers, the everyday buyers, the day traders, lost a lot of that money on MoviePass, because MoviePass wasn't good financially. It wasn't making any money. It was losing money by getting subscribers, and it went bankrupt all the way down to zero. But Robinhood stopped people from being able to buy that. So this isn't the first time this has happened, but this is the first time they're getting a lot of news about it.
Explain then, why did you do this? Did the SEC call you and tell you you had to do this? Was there a problem inside the company in terms of liquidity, in terms of the amount of deposits that you had to put it in front to the exchanges? What led to this?
Sure, and let me explain exactly how this works. First of all, I want to address some of the misinformation that's been out there, because there's a lot of it. We absolutely did not do this at the direction of any market maker or hedge fund or anyone we route to or other market participants. The reason we did it was because Robinhood is a brokerage firm. We have lots of financial requirements, including SEC net capital requirements and clearinghouse deposits. So that's money that we have to deposit at various clearinghouses. So some of these requirements fluctuate quite a bit based on volatility in the markets, and they can be substantial in the current environment where there's a lot of volatility and a lot of concentrated activity in these names that have been going viral on social media. So we're really in unprecedented times, and in order to protect the firm and protect our customers, we had to limit buying in these stocks. And to be absolutely clear, Go ahead.
But it sounds to me, though, that you're suggesting that there was a liquidity problem inside the firm. And my question about that then raises all sorts of new questions about whether there's a systemic issue underneath the system and underneath the company unto itself.
No.
You see, I feel like it is a safeguard the way his answer is, and obviously he's the CEO, and this is a company that they want to take public, so they're going to have a valuation. Their books are going to come under extreme scrutiny, and they're going to be looked through very carefully, and we'll know a lot more about Robinhood and its financials and how it's making money. But I know they have Robinhood Gold, which is essentially, and they've had other big controversies, Robinhood's had a lot of controversies, especially with that younger investor who took his life based on Robinhood's misreporting of his account, showing he was in these big negatives because of call options. But one of the things I'll say about this CEO is he's taking the safe route of saying we're protecting consumers, we're protecting our users, while he is also saying he's protecting the firm. But the biggest problem is that if everyone loses all this money, or they lose all the money from using Robinhood Gold, and they can't pay it back, that's going to cause massive problems and shortfalls for the company that they won't be able to recover from. So they're really trying to cover themselves. And so, yes, they're trying to protect the consumer, but more so they're trying to protect Robinhood, which makes sense. He's the CEO, but let's keep listening.
No, there was no liquidity problem. And to be clear, this was done preemptively. So we did this proactively, and thousands of other securities remain tradable on the platform. Customers that held these positions were able to sell them. And we're doing what we can to allow buying and to remove these restrictions in the morning. But also, you might have seen Robinhood has been the #1 app in the App Store overall. So we have seen.
Okay, so first of all, Robinhood is not the #1 app in the App Store. It is probably the #1 finance app in terms of the #1 trading app for young traders or new traders, but it's definitely not the #1 app in the App Store. But there's just a little bit of a misspeaking right there. But what's going to happen is he's afraid of is all this is going to really affect their IPO. I think that's what he's most afraid of. And I'm guessing there is a liquidity problem if they were so afraid of people trading it. But the bigger problem that we're seeing now is tech having this major power and ability to control everything in our lives. And especially when it comes to finance, they're having control. They can see all of our data. They can see all of our accounts. They can see all of our finances from your bank apps to your trading apps. And what they can now say is, you can't withdraw this much. You can withdraw that much. You can't buy this stock. You can buy this stock. And that's a lot of power. And that's a lot of power taken away from the everyday investor, the everyday consumer, and a lot of power put into major companies like Robinhood, which isn't public yet, but still has a lot of investors in it and a lot of people's well-being and finances and fiduciary responsibility to these people that gave them money. So their interests are less in that and more in
unprecedented interest due to the fact that finance has been culturally relevant in a way that hasn't been before, and these stocks are going viral on social media. And I think it's really interesting to juxtapose against some of the other questions that we've been having before this. Of course, Robinhood stands for everyday investors. From the very beginning, we have stood for investors, opening up access and giving them the ability to trade commission-free in whatever they want. And we've gotten a lot of criticism that, maybe there should be more restrictions. So it pains us to have had to impose these restrictions, and we're going to do what we can to enable trading in these stocks as soon as we can.
All right. Let's go back. Okay. So were we able to watch that? Let's turn the sound off on that really quickly.
Stream that.
How did that sound and how did that look? And I'll talk more about that. So essentially, this is something that's really topical right now is AMC, Blackberry, and another stock that's really popular right now is Gamestop. You probably saw it, the video games at the malls. It was a very mall-based store. Lots of retail stores used to sell the discs, the games. You could play them when you walked through the mall. Now that company, as you're seeing coronavirus, plus you're seeing just overall retail been declining over the future. I mean, over the past 3, 4, 5 years, you've seen retail sales go really far down. Malls have been going bankrupt. GameStop's been closing stores. I think they almost wanted to close 200 stores recently. Their financials were very bad. Their stock was very low priced. Ryan Cohen, the founder of Chewy, took a big position in it. And he's a very smart, intelligent guy. He built one of the biggest online businesses. Actually, I think the largest online business to ever be acquired at the time, Chewy, at $3.5 billion. So you got Ryan Cohen investing 10%. He upped his position to 12%. And he's made out very well because he made that before this whole spike. But the thing is, stocks shouldn't go up this much. This is so much speculation. This is so much volatility. And then companies that are involved with this, like trading companies or trading platforms like Robinhood, are now trying to stop people from investing in this. And essentially, they're trying to stop them from losing money because this will come back down. If you are investing in GameStop, expect to lose money if you're investing this late in the game. Because it's going to come down. We saw this happen with Kodak as well. These kind of like pump and dump, stock goes up for no reason, all based on speculation, all based on news, all based on one event that doesn't have anything to do with their financials or the strength of their business, skyrocketed. And some people make a lot of money, but a lot of people lose a lot of money. So hopefully that helps. And